You are watching Benzinga Live.
Welcome back to another episode.
I think Tesla could be vulnerable to that.
Layoffs happened today on Google, and the market's on.
In terms of breaking.
Amazon, Salesforce, Apple.
All right, y'all. Welcome back to Benzinga Live. I'm your host, producer AB. I've got my man Ryan Pannell from Kaiju hanging out backstage. We're going to be doing a deep dive into AI today. So without further ado, let's give Ryan our, I know we've talked to Ryan before, but let's give him our special Zinger Nation welcome and catch up with Ryan when we get back. All right, Ryan, how are you doing today? Where are you joining us from?
I'm joining you today from the west coast of Canada. I'm in Whistler for a few days before heading down to Colorado for the big Future Proof conference. So snuck back in here, a couple of days of spring skiing, and then, I get back to work down in Colorado.
Well, beautiful. I was just out in Colorado. Always a great time there. Well, welcome back. Today, we are going to be talking about AI and prediction. To begin, let's start with how you think about prediction in the market. How much of it has to do with psychology versus abstract mathematical models? How have people thought about modeling markets before the advent of AI, before computers even?
So when you think about prediction in the market, you're applying mathematical models to identify and exploit repetition in human behavior. Really, that's it, right? Like, it's the math is identifying the footprint of a repeating behavior. There's no way a machine's gonna, 6 months out predict random human or global macroeconomic behaviors. There's no way it can do that. The world changes quickly and in unpredictable ways, as we have seen time and time again throughout our history. So as you get closer to the current timeline, the power of prediction becomes enhanced, right? Because the behavior today that results in the stock price moving tomorrow, you start to be able to pick that up. And so that's really what we're focused on in terms of prediction. We're not talking about scraping Reddits for social sentiment or that type of thing, because it's not reliable in terms of execution on that. You can have an enormous amount of social sentiment leaning one way, stock moves another way. What's reliable are price, time, and quantity patterns. That's what we're looking at. So that's how we think about it. It's still human behavior, but we're picking it up. We're picking up those signals in the noise.
Got it. Does AI change how we construct these models, and how does it enhance them?
Yeah, it has changed. I mean, this isn't a new idea. Quantitative trading, which is trying to find patterns that repeat reliably and then trading off of those patterns, has been around for a long time. The challenge with quantitative processes is that they're static. So you look at 10 years of historical data and you say, every time I see A happen, B is the result. So I'm going to build a system that does whatever it is, buy, short, hedge on A, presuming that I'm going to get B. Only it's not that exact. It's not that simple. It's not whenever A happens, B happens. It's whenever some variation of A happens. A subset 1, subsection B happens. Okay, so it's close to A, but it's not exactly A. So your result is going to be close to B, but not exactly B. And as the market changes, which it always does, and it doesn't revert in terms of behavior, like we're not going back to 1984 ever. We're not going back to 2000 ever. There will be different bubbles, different conditions, but not that exact circumstance. So you can't just trade A and get B. So over time, what happens to quantitative systems is they break, right? They come off model. You're sort of close to B, and then you're not close, and then it's, well, crap, this doesn't work anymore. And there's a deep dive back into figuring out what broke. Did the strategy break, or has the market moved in a direction where this is never going to apply again? With artificial intelligence, you have the machine learning component, and the machine learning component allows the system to unweight and redistribute weighting across the criteria you're using. So instead of looking for A and trading B, it's able to recognize that it's a variant of A now. And so it's going to adjust to get a positive variant of B. And it can do this, depending on the sophistication of the system, in a very short time scale. Like we're talking overnight retraining, weekend retraining. So every day this thing wakes up a little bit smarter and a little bit able to dynamically deal with changes in behavior reflected in the market. So that's the real power of AI when it comes to systematic trading, and obviously what we get super excited about.
Yeah, I mean, that is super exciting. It's always fascinating to hear about this technology and how it's impacting and changing markets. Okay, practically, how do you actually train the AI to make these predictions? How does Kaiju do it?
So there's a couple different ways that you can approach this. Our way is a synergistic sort of human machine process. So we start with human observations, right? We've been doing this for a long time as traders, as portfolio managers, as fund managers. And so you have systems that have repeatedly worked for you across all market conditions. So step one, verify whether that's an exploitable system or whether you're just the luckiest person in the world, because that's possible, right? I mean, if there are 6 million different possible executions of this strategy, but you only saw in your career 7,000, then you may have accidentally picked all of the right ones. And that strategy itself is total garbage. So the first thing that we do is we scrape back and look for every instance of an observation that we've had that's repeatedly positive, and we get the machine to tell us whether we're nuts or not. So far, so good. We haven't turned out to be lucky. The ideologies have been sound. So that's number one. And then what we do at Kaiju, because we don't do black box AI, we do rules-based, we create a system of guardrails around the strategy, largely risk-based. You can't use more than this much of the portfolio. It has to be diversified in this way. It's nothing that any investor, sophisticated investor, would be unfamiliar with. We cannot have a loss greater than X ever in any randomized outcome of this strategy. Okay, so we put the guardrails around, and then you start running the strategy. Is it still positive? Is it still performing as you would hope? If the answer is yes, then here's the fun part. We allow the machine some autonomy to adjust what we're doing. And that's really what takes it to the next level. Like up until that point, you're talking about humans informing a machine that's applying largely quantitative strategies or quantitative overlays to the strategy. But once you get into the machine learning, now it's a symbiotic refinement. Right. So, we teach this thing spreads above and below the market. This thing then comes back and says, actually, I'd do 1 to 3, I'd skew them like this, and I wouldn't trade all 600 of these symbols ever. And the performance jumps from what we had, which was excellent by any measure, to shocking. And sometimes, in order to achieve that, it'll push the envelopes of the risk guidelines. You'll go back in on the human side and say, okay, that's fantastic. Those are huge numbers, but I'd be more comfortable if it looked like this, back and forth, human and machine, until you have this basically refined strategy. And once you implement that out there trading, then you have that machine learning component that over time rewrites portions of its own code. So it starts to make adjustment to the criteria that you all agreed on, not the risk criteria, just the entry and exit criteria. So you're still in the same protected state, but now it's saying, okay, every time I see this, I'm actually going to weight it heavier than when I see that. And I'm geeking out about it a little bit, but it's very cool to watch in real time.
What are the limitations here? Are these limitations fundamental or just a product of a technology that hasn't yet reached maturity? Is there a future in which artificial intelligence is powerful enough to be truly prescient?
Okay, so limitations. There are a number. So as I touched on right at the beginning, currently predictive AI is not great in the long term. It's not going to give you a bunch of it's not going to build a portfolio for you that's guaranteed, highly probable at the end of this year to have hit your profit target, right? It's too far away. There are too many variables that can be introduced that can break that. So one, its accuracy is highly near term. We're talking like 3 to 8 days with a high degree of certainty. Two, it's looking for repeating behaviors. there aren't an unlimited number of repeating behaviors. There are enough to pour as much money as you could possibly want to pour into it. But still, you are looking for specific behaviors. They're not always there, always repeat. So as things become less reliable, those fall off. Behaviors that become more predictable, they get added. There's a constant churn with respect to ideology that takes a lot of heavy scientific lifting to keep up with. Obviously, on the processing side, you're reading articles about this all the time. There's a reason NVIDIA's stock is through the roof. Like, we can't possibly get enough power. I mean, at our shop, we're doing, like, per strategy, you're talking 2 billion discrete examinations every day before a daily rebalance. 2 billion. And 220 terabytes of ingested tick level data. And we watch the stock market at the tick level. Every stock, every trade. It's an enormous amount of processing power. Could we use more? Yeah, fine. Hand it over. But we're starting to get into a bottleneck scenario with that. So that's that limitation. And then finally, there's the type of investing that matches the goals that the investor has. If you are a fundamental investor, if you're Warren Buffett, if you're a believer in foundational market mechanics and the value of corporate underpinnings in terms of stability and strength, this probably isn't going to be an appealing technology for you. We've never been in that camp. We've always been science-based systematic trading. So for us, this is like an obvious next evolution. So it's not an end all and be all. It's not just going to replace everything. I think most investors are aware of that at this point. And, to wrap up here, in terms of your prescient question, I mean, this artificial general intelligence that people keep throwing out there, like, we in this community haven't agreed on what that is yet. Like, that it can perform substantially a number of tasks better than a human. Calculators have been doing that for the last half century. Like, your computer does that already. So what are we talking about here? Sentiently or autonomously? Big difference. Autonomously, yeah, sure, it's going in that direction. Sentiently, it's not self-aware. It's never going to be self-aware. So artificial general intelligence in terms of sort of worker bee capacity, yes, of course, getting there, almost there, in some areas already there. But in terms of, largely replacing humans, no. That's just not, it's not possible because of the way that these systems are programmed. They're objectives based, and we don't give it an objective of having an awakening, right?
Right. Well, what does this tell us about the future and determinism or lack thereof?
Well, I think what it shows us is that there's use case in prediction, and not just for making money, right? I mean, everybody wants a stock market crystal ball. That's not new. I'd love to have that. Don't have it sitting over here. This comes close in a number of different areas. It will get better, but it's not just limited to that, right? I mean, is there benefit in, let's say, whole home control predictive behavior, so that you're wearing your smartwatch, it's communicating with your house. It knows your body temperature. It knows if you're coming down with a cold. It knows if you've had a bad day, and you head home and the whole house is prepared to receive you in a way that fundamentally changes your experience, improves your mood, improves health. There's a hot bath already drawn. That's prediction, right? It's taken a bunch of information gathered at source. It said body temp is high, heart rate's a bit elevated. I see he's leaving work early because I'm tracking his car route home. And yeah, that's route number 3, coming home early. I think he's probably not well. Let me set the house up for him. And you could apply this to anything from, what you've seen driving your car, flying a plane, et cetera, et cetera. There's solid quality of life use cases for prediction. That doesn't mean that we're predictive by nature in all areas or will ever be. So in terms of determinism, yeah, I mean, you could apply the Westworld model where predictive technologies are used to manipulate. We are not close to that yet. So we don't have to sort of panic and foresee that outcome.
You kind of answered my next question there, but is human behavior ever random, or are changes just predictable behavior reacting to unpredictable circumstances?
Well, think about your own behavior. I mean, we're highly predictable and highly unpredictable simultaneously, which is what makes us interesting, right? I mean, so what's a repeating behavior? If you watch the Super Bowl every single year without fail and have for 20 years, you're predictable in that area. One area. I have some I have a high likelihood of being right and guessing where you'll be, what you'll be doing on that day. Does that mean you're a predictable person? Absolutely not. You know, are you predictable in the sense that if you're on holiday, you, Aaron, are on holiday, you're at a ski destination, you are skiing. You are golfing when you can golf. I know that much about you, right? If you have an opportunity to golf and it's a beautiful day, I got a better than 5 in 10 chance that you're going to golf. But on any given day, can I predict that you'll golf? I have no chance of predicting that. So we're a mix, and the market is the same. There are specific behaviors that repeat over and over and over again and can be exploited, and others that are, shock everybody. The U-turn after March 2020, COVID collapse, and you get $1.4 trillion injected into the economy. Who saw that back up above the previous high 6 weeks later? Like nobody ever. So that was unpredictable.
Yeah, I mean, those are some great examples there. Really puts it into perspective. And you're right about the golf in there. How does AI account for stochastic variables? Can it? How does this differ from a human's ability? Is this why it is important for AI to be used as a supplement to human decision making versus replacing it?
Yeah, absolutely. Numerous studies have shown humans have overly optimistic opinions about predictability and otherwise random outcomes. It's why we gamble, right? Gambling exists because you think you have a system, because you think that you just might be able to beat the odds on a specific game. When I see this, I play that. I always go to the casino, and the first thing I do is ABC. Whatever it is, you're convinced that an otherwise completely random environment will favor you. And the machines don't do that, right? If there is an exploitability in the pattern that it's predating on, it exploits it. If there is no reliable predictability or reasonable certainty that an outcome will be achieved, it just doesn't do anything with it. And that's actually how, if you look at our ARC system, our AI risk containment system, which essentially is the trade management and off-ramp for almost everything that we trade, that's constantly evaluating the entire market, sectors, industry, our portfolio by segment, by tranche, by strata, in relation to other stocks that we're holding, and asking one question: am I better off with or without this position? And the moment it gets to a point where the preponderance of criteria weighs in the nope, this should go column, it just unloads it. Like, that's it. It's not like, well, come on, man, I got a feeling about this turning around. It just unloads it. So, I mean, human optimism is why we're still here. It's a great thing, but the machines can really help with shining a bright, responsible light on the probabilities of what you're wanting to achieve actually occurring. And I think that's helpful. Like, if you had a machine as you were going to trade something that said, hey, you can totally do it and you might win, but this has happened 96 times in the last 4 years and only achieved your outcome 3. Wouldn't you stop and say, oh, okay, maybe that's not such a good idea, or at least consider it, right? So that's where we see it, assistive.
Got it. So then how is AI best used as a risk management tool? How do you use it to protect against everyday risks in the market? What about black swan events? I mean, you mentioned the COVID crash and subsequent U-turn that we saw basically 4 years ago today.
That's a great question, actually. That's a really good question. So in terms of risk management, number one, it's going to be able to see into every crack in the market simultaneously at a level that we can't, right? So again, we're not the only people that run a system as sophisticated as we have. There are lots of, well, I wouldn't say lots of managers. There are a number of managers that can do this. And when you're watching everything that's trading at the tick level in every sector, everywhere, you start to see collapse very early, right? Because it's everywhere. It's not just in the 5 or 6 or 20 stocks that you're trading or watching. So you can see it early, number one. 2, when we run regime classification and change detection engines at a global level, sector, industry, discrete stock level. So these engines are doing two things. One, they're saying, what do I think is happening now? And two, they're saying, what do I think is about to happen? In black swan events, those engines tend to, across everything that they're monitoring, return results of, I don't know what this is. And that's, for us, incredibly useful. It means it's never seen it before, ever, in trillions of terabytes, or sorry, no, it's not 220 terabytes, not trillions, trillions of examinations for sure. It's never seen this pattern before. So it's not going to tell you what it is. We don't have that level of sophistication, but it can absolutely say, I've never seen what's happening right now. And that allows you to take a substantially defensive posture, right? If you had a couple of positions that you weren't sure on, you were on edge, now they're gone, right? And you're going to start taking protective measures, not directionally, but maybe just from a risk perspective. And it can do that beyond what we can. So that's extremely valuable.
Yeah, I mean, so given what we've talked about today, what do you think is the key insight a viewer should take away regarding AI and the nature of prediction?
I think that there's a couple. So key insights for viewers to take away. One, skepticism is healthy, right? You're seeing this technology all over the place. The SEC just handed down 2 huge fines to investment managers that were greenwashing their products. So claiming that they were using AI, not really using AI. That's unfortunately going to run rampant, as it did with crypto. And so it's reasonable for investors to be skeptical, but also it's reasonable for investors to be skeptical and curious. Be curious, look into this. They're for sure on the generative AI side, which is not where we work. And on the predictive side, there's heavy use case for these technologies. So investing thematically or being interested in testing out, not going whole hog, but testing out new technologies as they're made available at the consumer level is a reasonable position to take. Make the technology prove its worth to you. You got an email client that says it employs AI to streamline your inbox. Take the 14-day trial, try it out. Did it do anything for you? If no, get rid of it. If it did, fantastic. I hope it saved you some time. And you can repeat this over and over again. Market mechanics, trading, lifestyle, whatever. That would be my takeaway. Curious skepticism. That's a thing.
I see a good question in the chat from Beach Bum Trading. He's asking, have you ever tried to use AI to identify chart patterns?
Yeah, for sure. I mean, the chart patterns, and I'm assuming we're talking about candlestick charts here. So
Yep.
the chart pattern is a visual representation of the price, time, and quantity that we're consuming, right? So there's a behavior that creates the candle. And whether that is machine driven, human driven, or a combination of the two, for sure, that's what you're seeing. So as humans, we need the candles to identify the behavior. Because if I gave you, billions of transactions, or myself, like, we're not going to be able to go, oh, look, I can see a clear behavior there. We need to see the candle behavior, 1 minute, 5 minute, daily, weekly, monthly, whatever it is, to say, okay, this is the perspective I'm going to have on that behavior. The machine is doing it at the trade level. So it's a roundabout way of answering. Actually, it's doing that. It's analyzing those chart patterns, but it's doing it at the big data level rather than the visual level that we look at. But to tack onto that, that's actually where we start to train it. It's like, here's a repeating pattern that we see on the chart. It corresponds to a type of behavior. Can you confirm that we're right there? So I hope that answered that question.
Yeah, no, I mean, it was a good question. Great answer. Well, Ryan, this has been a great conversation, learning more about how AI can be used to predict things like market trends and really just prediction in general. Hope everyone in the chat, again, enjoyed this conversation. Ryan, always a pleasure to have you on. Do you have an idea of what we're going to be discussing next?
I have no idea what we're going to be discussing next. That's always your guys and our guys like collaborating, and then they come up with some, clever thing that keeps it interesting, Aaron. I always like that. It's a bit of a surprise,
Beautiful. Well, I guess we're pretty unpredictable in that way. But
go.
we will, we're predictable in some ways, but unpredictable in others. MD saying come in late, we'll have to rewatch. Yeah, you'll be able to just rewind here on YouTube or wherever else you're watching. Good morning, good afternoon, wherever you guys are, to everyone joining us. MD saying good morning, so he's probably out there out west with you. But all right, Ryan, I'll let you get back to it. I know you guys are busy over there at Kaiju, building some incredible technologies. Always a pleasure to catch up with you. We will be back.
Thanks, Aaron. It's always great to chat about AI with this group.
I know. I love it. I love learning. We're lucky enough to have you on who has, experience, not just in AI, but obviously in the markets as well, because there's so many people now. You log on to Twitter or Facebook or wherever you go, and so many people talking about AI that don't really know what they're talking about. You do. That's why we're lucky enough to have you on the show. But again, I'll let you get back to it. Have a great rest of your Tuesday and enjoy the slopes, man.
Thanks very much. Appreciate it. We'll talk to you guys again soon.
Of course. All right, guys. Again, that was Ryan Pannell from Kaiju. Real quick before we wrap up, we'll do a quick market breakdown, see what's going on. Wow, SPY ripping, came back from the lows of the day, basically unchanged, trying to break into the green. Your Qs struggling a little bit more, still down about 0.5%. The Dow Industrial Average, boom, baby, up 0.5%. That must mean, yep, energy, XLE, XLF, both having strong days. So Dow, your leader of the day so far. We'll see if that trend continues for the rest of the day. We do have tech tune-up starting up right now with Mr. Paul Meeks. Do not go anywhere. This stream will redirect you there, and then I'll be back on at noon in 30 minutes for another great interview. See you guys then.